Welcome back to Cheddar, everyone. Robinhood grabbing headlines today as it makes its Wall Street debut. The online brokerage going public on the Nasdaq, and the company's CFO, Jason Warnick, joining Cheddar News to discuss the opportunities the company now has when it comes to expansion and other initiatives.
We're really not putting any limits on where we might go. Certainly, we have a license to operate a broker-dealer in the UK, and that represents one opportunity for us. We did pause that, in order to make sure that we could focus all our resources on our domestic growth. But there's certainly broader opportunities from there.
All right, joining me now is Nelson Griggs, president at the Nasdaq. Nelson, a huge IPO that you've got on tap today with Robinhood. Fun to see it. Let me ask you this. Robinhood wanted to democratize this process by letting investors, its own users, in early, just like institutional investors. What, if any, role did the Nasdaq play in that process?
Well, in that process, we really do not play much of a role. Our rules allow for that. I think you look at how Robinhood wanted to coordinate that with their users on the platform, as well as the coordinating bank, in this case, the lead bank at Goldman Sachs, and that's something that they had chosen to do, and it was a higher allocation than we normally see for traditional IPOs, around the 10% range. And it was something that was very important to them to make sure that their customers knew they appreciate how much that they have done for Robinhood and their growth.
Mm-hmm. Huge IPO, $30 billion company now with its debut happening about smack dab in the middle of this year. Nelson, is it already a record year from your vantage point for IPOs?
Oh yeah, we've had at Nasdaq alone about 210 we call operating companies, and then another 100 or 240 SPACs this year. So we're in the a historic range in terms of how many IPOs we have seen this year, and we're only at the end of July, so it's been amazing.
What else is in the pipeline?
Yeah, I think you're going to see a little bit of a pause here in the month of August. There'll be definitely some deals go out, but a smaller number. And then we do have a very active September and fall lined up, where there's going to be more enterprise technology companies. We have a whole group of consumer names. And as we have seen, I think this year already, the biotech healthcare pipeline has been pretty phenomenal, and that'll still see some activity in the fall as well too. So markets depending, we'll have a real active fall as well.
The latest China crackdown, does the Nasdaq see a direct impact to listings that were in the pipeline, companies that you anticipated would go public here in the US from China this year?
Yeah, we definitely have had a very active pipeline there. We had a very active pipeline. I do think that is a case where there's more of a hard time out right now, both on the China side, but also the US investors wanting to make sure that it's a productive relationship and market for those companies going forward. That's really hard to tell the time frame that'll take to work itself out, but yes, at the moment I'd say that market's paused a bit.
What would it take, Nelson, to loosen that process and to see activity resume? What needs to happen on both sides?
Well, again, I think the number one thing is an IPO has to have a receptive audience in terms of the buy-side investors here in the U.S., and that's really up to them to determine, their comfort level and making sure that they're investing in companies that they know what they're really buying and how long, how the regulation side on the China side is going to affect them. And then on the China side, I think you just have the same sort of thing is what is how prescriptive will they be in terms of what they allow companies to do, so to make sure investors have that clarity. So it's definitely a two-way street. The companies would like to list. So as we talk to companies out of China, they're very anxious to tap the public markets here in the U.S. particularly, but it does depend quite a bit on those two sides, the Chinese government as well as the U.S. buy side.
So I know just about a week ago, Nelson, your company, the Nasdaq, announcing a private stock market in partnership with Citi, Goldman, other banks, other entities. How does this work, and who gets to take advantage of it?
Yeah, so we're thrilled about that partnership. So we've been running the Nasdaq private market for the better part of 6 years, and what we do is we help growth companies that are private have their employees, former employees, early investors, gain some liquidity based on what the company allows them to do, and find the buy side, and we run a platform to help them do that. And it's been growing very quickly this year. We've had our biggest year ever. So what we decided to do was, now it's reaching some scale, is work with some of the leading banks that we're real proud to work with to tap into their distribution arms. So it's going to be primarily the same sort of structure where it allows companies to work with us, private companies, when they want to provide their employees or investors liquidity and how they want to structure that. And that's becoming just a very, very popular way to make sure that employees can get liquidity as it is taking longer and longer to be a public company.
So let me ask you this, Nelson. Robinhood, a huge win for the Nasdaq in terms of a tech listing this year. Bumble, another huge win, just to name a few that we've seen this year. It's my understanding that the stock market has been operating for several years now, 7 to 8 years, but now there's a bigger investment. Has that allowed you to build a relationship with these tech companies over time that helps in securing these big name IPOs?
Yeah, and it's not just tech. There's quite a few consumer growth names I put in that category, but we have worked with over 400 companies to date in terms of their private liquidity. So when you're providing a company a good service, you get to know senior management. Typically these programs would start a year before they go public. Now they're anywhere from 4, 5, 6 years, ABC rounds. So we are getting close to companies. That's part of our plan here, is to make sure companies understand the value we bring, whether it's private or public. So great question. I'm glad you asked it, and the answer is yes.
Okay, my last question, because we're tight on timing, Nelson.
Yeah.
I did see that your CEO did pen an op-ed recently, just about a week ago, talking about the importance of cloud and how during this pandemic we've seen more and more transition to the cloud. Begs the question of cybersecurity. I mean, can the Nasdaq assure investors that trades happening via the Nasdaq are secure?
Yeah, well, let's keep in mind that Nasdaq runs a lot of businesses, and many we're cloud first, many are in the cloud, some are not. So you think about core trading engines, et cetera. There's maybe a potential future for cloud there, but there's things we do in the cloud, things we don't do in the cloud. The number one thing for us is security. We think we have the best security team on the planet, and they work very, very hard to make sure that Nasdaq is protected. So I think when you hear cloud and Nasdaq, make sure you recognize that we run almost a couple hundred different platforms, and some are cloud, some are not cloud.
All right, Nelson, well, a huge day for you. Congratulations on the IPO. I do hope you'll come back. That's Nelson Griggs. He's the president of the Nasdaq on the big day that Robinhood debuts on the Nasdaq.